Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the week of December 5th through December 9th, when we'll talk about how to make money trading when Pumpin Powell returns, as we saw this week in his talk when he came out on Thursday. We saw when they released the statement from Pumpin Powell, we got some big green candles, the market shot up. We'll talk about, again, strategies for how to make money when Pumpin Powell returns, and also all the other news, economic data, etc. We'll do our market analysis from last week. We'll talk about our strategies, so stick around to the end of the video. We'll talk about some additional strategies for, again, how to make money in the current markets. Good morning, DS Greg, Flip of the Shippa. Thank you for joining us for the live stream today. So we'll go ahead and get started. Hope everyone made money and found some good Cyber Monday stock market sales, made money based on our weekly trading game plan from last week. Good morning, Ollie in the Bay. Glad to see you as well. Thank you for joining us. So here's our notes for the part one of this week's weekly trading game plan. And again, this is a publicly accessible Google document. You should be able to find the link to our notes Google document in the description box below, so you can reference the additional links, tools, etc. Also our strategies in the future. These are all stored in a publicly accessible Google Drive folder. Again, you should be able to find the link to that Google Drive folder that contains the notes from many of our weekly trading game plans. So again, you can go back and reference any of the links therein. To begin with, this is our first full week of trading in December. So we have a bonus video for watching our weekly trading game plan this week. This is currently unlisted, but again, you can access this link via the notes to find some strategies about how to make money trading in December. So you can view that now via this link. Good morning, Walter Lyons. Glad to see you. Thank you for joining us as well. So now we'll jump over to FinBiz. We'll see how the markets ended up on Friday. We'll talk about in a few minutes. We'll talk about the jobs data that came out and kind of knocked the market back down on Friday after Pumpin Powell came out on Thursday and the market shot up. The jobs data knocked the market back down, but as we can see, it tried to recover throughout the day and almost ended neutral by the end of Friday. So we can see it was kind of split, advancing and declining, new highs, new lows, again, pretty split. We still have a majority of stocks above their 50-day moving average, about 74% versus 26% below, but the majority are still below their 200-day moving average. So we've got about 58% below, 42% above. This indicator was showing bearish on Friday. Again, the jobs data really threw the market for a loop after Pumpin Powell came out on Thursday, gave the market some hopes that they would be more dovish. Then the jobs data came out and pretty much indicated that maybe they need to be more hawkish, more aggressive with rate hikes. So we see the heat map is pretty mixed. See some of the news. Stock market signals the economy won't soon collapse under Fed's weight. So again, the jobs data. Got some Larry Summers. Fed will need to boost rates more than the markets expect. So again, he's predicting the Fed will have to be more aggressive, more hawkish. We see some of the futures, and we'll look at them in more detail. Again, we saw oil declined. It had broken up above in the low 80s, and then now it kind of bounced off that support at about 80. There's an OPEC meeting tomorrow. We'll talk about that a little bit. That may have an impact. Also, they're trying to do some price caps on Russian oil. So you've got competing factors going on in oil right now. We saw natural gas declined down around 6. And we see gold had pushed up over 1800, declined back down a little bit, and then we see all the futures on the indices are currently negative. See, the euro had made a run up. Now it's 1.05. The pound was up. The dollar weakened. We saw the treasuries the yields had bounced up a bit. And now again it's still pretty inverted, still below 4%. We'll talk about again the Fed interest rate hikes and where we think treasuries might be going when we look at the futures. Okay, so let's look at each of the indices real quickly, see where we're at. So look at the SPY first. So we pretty much see, when Pumpin Powell came out on Thursday, it shot up, tested this resistance, and pretty much got rejected from that upper trend line in that downwardly sloping channel. So if we zoom out to the weeklies, again, we can see it tested it's very close to testing the 200-week moving average. Pretty much, it needs to break out of that to get out of the bull market. It's bouncing between the shorter time frame, the 20-week and the 50-week moving averages. Look at the Qs. Qs is again, it's getting resistance from its shorter term, its 20-week moving average. So again, you can see it got rejected off of that, and pretty much that moving average is acting as resistance. Look at the Dow. Dow had been outperforming, and we see it broke out nicely out of the moving averages. I think there was some news out that the Dow was now in a bull market, which means it had advanced 20% or more above its bottom. So we can see the Dow is pretty strong. It broke above the previous high. So again, the Dow is acting like it's in a bull market. IWM, the Russell. Again, like the SPY and the Qs, it's getting resistance from that 50-week moving average, kind of stuck between its 20-week and 50-week moving average. So again, heavy resistance. Let's look at the VIX. We talked last week, that the VIX had been retracing, reverting to its mean. Now it's that's showing it sitting at 21.25. We did get a little bit of a volatility based on that jobs report. It bounced up very briefly, but now the VIX is sitting at 1906. So again, it wasn't really enough of a shock to cause a significant fear. And it was kind of interesting yesterday on Friday that even when the market was declining, the VIX was also declining, which tells you, okay, there wasn't really a whole lot of fear. And given all of that, the VIX should continue to keep coming down unless there's some other event that causes further fear. But otherwise, it should continue to decline. And we'll talk tomorrow about our strategy for trading the VIX, trading volatility, going into the next Fed interest rate decision on December 13 and 14. So if we look at VTI, the total market index as well, we see it broke briefly above the upper trend line and then fell back underneath that trend line. And we see it's getting support from that 20-week moving average, and it's got some room to run up to the 50-week moving average. So again, the BTI is like 4,000 stocks across all the indices. So I like to look at that in terms of a broader view of all the markets. So I hope that helps. Walter says he's targeting 17 on the VIX again, yeah, and talking about UVXY. And yeah, again, tomorrow we're going to specifically talk about our strategy of trading volatility in the VIX using UVXY. So now let's look at the groups and sectors and industries, etc. in FinViz, and hopefully if you're watching this video after the live stream, stick around to the end. I've got some new strategies of how to use some of these tools in the FinBiz Groups tab to possibly take advantage of some of the sector rotation we've been talking about for a while, both sectors, groups, industries within sectors, and also sub-industries within each industry. Again, we've been talking for a while that we're seeing these sector rotations where they're picking off the bottom sector, the underperformers, pouring money into the underperformers, taking profit out of the outperformers, and just rotating. And that's a good way to make money trading, and that's what we're seeing. So again, I want to talk about some additional strategies. I think we can find some opportunities to make money trading based on the sector rotation. So let me jump over there. I'll grab a drink a sec, and then we'll continue. So again, we saw this sector rotation on Thursday when Pumpin Powell came out. They tried to run technology, so we saw technology had a pop on Thursday, and then now we see it's at the bottom on Friday. So again, people tried to run technology on Thursday based on Pumpin Powell. The Treasury yields went down based on that, and again they tried to run technology. And then Friday, they took their profits and technology was at the bottom. We saw basic materials and defensives took the lead on Friday. For the week, however, we've seen a lot of profit taking in energy. So energy declined for Friday, declined for the week. It's the lowest performer for the month. And we had seen, for the quarter, energy had been one of the outperformers. So a lot of profit taking in energy. For the month, basic materials is good. It's ranking high both for the week and the month. And again, sector rotation in and out of technology, in and out of energy. And what we're going to see is within the energy sector, there's particular industries that they're rotating in and out of, for example, coal, solar, etc. Also, utilities is one that's run up and down. You see Friday was down big. It was down for the week. But over the quarter, we had seen utilities had been up. So I think I'm going to leave this to the strategy section. Talk more about the industries and sub-industries and how to look at that. We'll talk about that a little bit later. So let's talk about the economic data from this week. So on Monday, Bullard came out and said the Fed will likely need to keep interest rates above 5% into 2024. So that's hawkish. Bullard tends to be one of the more hawkish ones. But again, he's saying, higher for longer, above 5% into 2024. So, the markets don't like to hear that. Let me open that up and we'll look at that in a minute. Tuesday, let me zoom this out a little bit. So again, home prices are declining. We know the housing market's pretty much in a recession. We've got a consumer confidence number that was pretty much in line. Not very exciting. So it says the consumer's not, more fearful than they were. Good morning, Spacula. Thank you for joining us. Glad to see you. So again, mortgage rates dropped a little bit. We got ADP farm employment, which was up or was down significantly from what they expected. Got core PCE was a little hot. So again, the market didn't particularly like that. And then we got GDP data. So the it's showing that this data says, okay, in Q3 we were not in recession. Thank you very much for that super chat, Spacula. We really appreciate it. Again, thank you for the super chat, for all your support, Mr. Spacula. So again, this GDP data says, the economy's resilient. The PCE data says, hey, inflation's not really coming down. Again, we've been talking about that for a while. Consumer spending is still strong, so consumers still spending plenty of money. Again, negative for inflation. If they keep spending, that's not good for inflation. We got job openings. Again, this says, okay, there's still opening jobs, so the job market is still resilient. So thank you also, Ollie in the Bay, for that super chat. We really appreciate it. Also for all your support. Thank you again. Good morning, Ricky Khan. Glad to see you. Thank you for joining us. And you guys are great. We've got a great group of BeachBum traders. We appreciate all your support. So again, we saw that. We saw crude oil inventories decline significantly, and even though the inventories was down, we saw oil rolled over, went up to 83 or so, and then rolled over down, bounced off at 80 or so. Gasoline inventories were up. We hear gasoline prices are down. So a couple news items here, and you can access these articles via the links in our notes. U.S. economy expanded more in the third quarter than previously reported, and private sector job growth is the slowest since early last year, but is still growing. So then Thursday, we got job cuts. That says there's quite a few job cuts. That's layoffs. We got continuing claims. Continuing claims is higher than expected, but again, initial claims was less than expected, and so that says, okay, the job market is still pretty resilient. And futures rise after data showing slower pace of inflation. Hot U.S. inflation is cooling, so the data is indicating inflation is cooling, but not at the rate that the Fed would like to see. Then Friday, we got these payroll data, and one of the main things they were looking at was these hourly earnings was up, and that is wage inflation. And the Fed's not going to like to hear that, and the market didn't like that due to the fact that wage inflation means further inflation. The Fed's going to have to act more aggressively, raise interest rates to get that inflation down. So again, even though Powell came out on Thursday and said they potentially could slow the rate of interest rate hikes, he was talking about maybe 0.5, maybe as early as December. Then we got this jobs data, which says, hey, the job market's still strong. People are still spending money. Wages are still going up, and that's going to feed into overall inflation. The unemployment rate's only 3.7, so they don't have to fear the job market deteriorating based on their interest rate hikes. So, and we could see in this news, wages rose sharply. Too much of a good thing for the Fed. So again, that's why the market declined after we had Pumpin Powell on Thursday, pumped the market up. This jobs data knocked the market back down on Friday because the data says, hey, they may need to be more aggressive. So. Also, I wanted to point out that part of the Pumpin Powell theme from this week is you saw that, the market, there's a lot of money sitting, waiting for an opportunity to jump back in the market. And they took, like I said, as soon as Powell's statement came out at, what was it, 1:30, we saw a big green candle. Again, that was this money's all sitting on the sidelines, just waiting for an excuse to jump back into the market. And so we saw that big pop on Pumpin Powell's statement, and then he was, a little more dovish than he had been, and so the market really uh, was exuberant based on that on Thursday and tried to run up, and then we got the jobs data on Friday and pretty much knocked it back down. So we're getting definitely mixed signals, but again, there's plenty of opportunities to make a lot of money trading in that environment. And as you'll see tomorrow, we were pretty busy trading and made good money last week. So let's look at the economic calendar for next week. Again, there's this OPEC meeting. It's on Sunday. It is expected that they will cut production again, and that would obviously decrease supply. Also, they're talking, the EU is talking about putting a price cap on Russian oil, although they were talking about putting a $60 price cap on Russian oil, and apparently Russia's already selling below $60, so they could actually raise their price, make more money selling to people like China and India at a $60 price cut or price cap. So, yeah, we may see a reduction in supply. Now that should drive oil prices up, but even despite all that news, we're seeing oil prices, down around 80, and looks like it's descending right now. So we'll see what comes out of that, what happens. We might get a pop in oil prices early next week. So we got services PMI, so inflation data on Monday, ISM, some manufacturing data. Tuesday, got trade balance, not a whole lot on Tuesday. Wednesday, mortgages, typical oil inventories expected to continue to decline, but not as much. Again, standard. Then we get jobless claims again on Thursday. And Friday, we get PPI data. So, again, more inflationary data and also consumer expectations. So, we'll see it's expected consumer expectation expected to decline a little bit. So we'll see how that plays out. So not super volatile, but again, we've got some inflation data, some jobs data, etc. So we might get some small uh, blips of volatility. It looks like I think the Fed is now in their quiet period. I don't see any Fed speakers. So the days of Pumpin Powell probably done until they get to their interest rate decision on the 13th and 14th. Guess I should have left that up for earnings. So again, the next FOMC, next Fed meeting is December 13 and 14. And now they're talking, the expectation is pretty much for a 50 basis point rate hike, but, again, 50, 75, it's going up, and it's going to keep going up and higher for longer. So we've been talking about that for a long time. So let's look at earnings real quick. Should be winding down. So earnings calendar for next week. We got some software, C3, some software. Again, it does look like it's starting to lighten up a bit. Toll Brothers housing, jewelry, some retail. So again, there's GameStop. If anybody's into meme stocks, there's RH Hardware. So keep an eye on the calendar. There's some semiconductors. And, look for sympathy plays. Listen to the earnings. Listen for potential sympathy plays. Potentially take advantage of those. So. Okay, let me grab a drink. Let me check the chat. Looks like you guys are having a good chat. That's great. Love to see everybody. So we talked about earnings. We'll jump over to the Weeble market screen. Okay, just a quick reminder again. They're still running their 12 free stocks for Weeble when you open and fund a new account. If you're not already using Weeble, if you can use our affiliate link in the description box below. Again, get 12 free stocks. You get 2 for just opening an account, each valued up to $300. And then if you deposit any amount, even a penny, you can get up to 10 more free stocks, each valued up to $3,000. Again, as you'll see, Weeble's our favorite trading platform in terms of market analysis. We do due diligence in Weeble. We do the majority of our trading in Weeble. We really love the 4 a.m. to 8 p.m. Trading hours. Again, there are opportunities, at 4 a.m. and before others can trade. So again, if you're not using Weeble, it's our favorite trading platform, and you can get up to 12 free stocks. If you don't like the platform, you can cash them out, take your cash, and go elsewhere if you wish. So here's the market screen for the online browser version of Weeble. Again, we like to use this for market analysis. I like this histogram to see, okay, what's the distribution look like? So on Friday, we saw more advancers than decliners, but the majority was very small advance or very small decline, so pretty balanced. Again, as we've seen the past couple weeks, the NASDAQ is having more outflow than the NYSE, the Dow. So again, a lot more strength in the Dow than in the NASDAQ. Again, another place you can see near-term earnings calendar is in this calendar section. Click on earnings. You can see who's coming up in the near term. It'll say before market open, BMO, or after market close, AMC. So I find that's helpful for a near-term earnings calendar. Welcome, Doug M. Thank you for joining us. Glad to see you in the chat as well. Hope you're doing well. So let's look at the best performing industries for the week. And again, we're going to take another view of this as well in FinBiz. Let me see, education, real estate was mixed, metals and mining was good, leisure, automotive mixed, communications kind of mixed, renewable energy. Again, we've seen rotations in and out of solar. Coal, as we've talked for weeks, rotations in and out of coal, in and out of solar. Look at some of the ETFs. So right now, up on the Dow, short on the S&P, up on small caps. So again, past couple weeks we've talked about there's potential rotation into mid and small caps. So we're seeing small caps here, but overall bear on the Dow or bear on the S&P. VIX short on the VIX, so VIX down. Russell bull, so again, small caps, possible rotation into small caps. Up on the Russell. Industrials, again, Dow sectors. Healthcare was positive. Energy was negative. Again, rotation out, rotation into communication services, which had been pretty negative. Out of utilities, again, rotation. And technology was negative on Friday, but very positive on Thursday. Basic materials have been strong. Consumer cyclical mixed. Consumer defensive very strong. Again, whenever we get into, potential recession, potential higher interest rates, consumer defensive is going to do well. Real estate's got hit pretty hard. Financial services was down. These carbon credit ETFs have been popular. Here's that aluminum. So aluminum, as we'll see in the industry chart in a minute, again, we've talked about for a while, aluminum been beaten down. Now we're seeing a rotation into aluminum. There's copper, carbon credits. So here's bonds. Here's an inflation ETF. So inflation's, expectations is still high. So treasuries, 25 plus treasuries. So now let's look at the futures. And I'll just throw out my financial, disclaimer. There's not financial advice. We're not financial advisors. It's for education and entertainment purposes only. So let's look at the futures. So here we can see, the Dow had a nice run. Looks like it, may have topped out, but it's still very strong. S&P looks like it's rolling over. There's the big Pumpin Powell bar. Again, we see that on all the indices. There's the big Pumpin Powell bar. And then when the jobs data came out, we got a rollover. So right now, the indicators, the futures are indicating a rollover going down. Here's the retracement on the VIX. So again, all indications are the VIX will keep going down unless we get some kind of catalyst to pump it up. Again, we'll talk about that tomorrow. Here we see oil. It spiked up to about 83, rolled over, sitting about 80 right now. See natural gas went into pretty steep decline on Friday. Gold, broke above 1800. Getting some retracement there. Silver had a big run too. Again, they got a little extended on the dollar weakness on the Powell pump, and so a little bit of a retracement, but the trend is up. Same thing with copper, all the basic materials, platinum, palladium, etc. Again, the dollar's been weakening. It's probably sitting around 104 right now. Yep, DXY sitting around 104 right now. Oil's at about 80.34. Gold's at 18.11. Silver's at 23.3. And natural gas at 6.82, or 6.22. So welcome, Tanavir. Thank you for joining us. Glad to see you as well today. Hope you're doing well. So just in time to look at treasuries, Tanavir. I know Tanavir's into TLT, right? And they had a pretty good run this week. Now, again, as we've been talking, they pushed the yields on the treasuries are down, 3.5, 3.6, etc. But they're going to have to go up because, again, the Fed rates are going to go up to at least the range that they're talking right now is 4.5 to 5. Now, some people are talking, higher than 5, but you also heard Bullards come out and say, they're going to have to stay around 5 into 2024. So again, Treasury yields are going to have to come up. That means prices are going to have to come down. Just exactly when that occurs, it might be when the next Fed decision is. Again, we saw the dollar finally, is weakening right now, so that buoys up the dollar-denominated commodities. So all the other foreign currencies are up, etc. too. So. And again, there's, until the next Fed decision, there's not a whole lot to change these trends in general. Some of the data may give us a little bit of volatility, but I think the overall trends will stay pretty much intact until we get to the next Fed decision on the 13th and 14th. So Let's talk about some strategies as well. Again, I wanted to talk about the sector rotations. Just a quick reminder, don't get hurt from the FTX bankruptcy fallout. It's still ongoing. There's still other exchanges failing, etc. We don't want to see anybody get hurt, get caught in the fallout from that FTX bankruptcy. You can see our little short. That was a clip from our previous discussion in one of our game plans. Now, again, I wanted to talk about ways to identify additional opportunities in these sector rotations. We've talked about, the underperforming sector getting money poured into it and going to outperform, and then profit taking out of the outperformer and it dropping down. We looked at the sector charts a bit, and I want to dig into the industry chart underneath that. So here's what the idea that I had is um, the the groups tab in FinBiz is great for seeing the relative performance for a particular time period, so we can see, okay, who is the top performer, underperformer, etc. What it doesn't tell me is are they at near a top or a bottom? So, for example, is utilities near a bottom, which means I might be interested in going long on utilities, or is aluminum, if they make a run into aluminum, is it near a top, which means there'd be an opportunity to short it. So there's another tab in this group tab in FinViz. As you can see, what we were looking at a minute ago was the overview. Well, we were looking at the bar chart tab, but there's another tab here called charts. So what I wanted to do is then look at the charts for each of these um, sectors, industries, sub-industries, and see, okay, as we can see, basic materials ran up, but it's not near a top and it's not near a bottom. So I wanted to share with you that you could use these charts. You can see communications services. It may have run up on Friday, but it's still very low. So I'm looking for extremes, tops or bottoms. That may be opportunities then to long or short something. We can see consumer defensives get pretty high. It's not really at a top, but there might be some resistance there. We see energy, even though it's been down recently, it's still very high. So again, even though it's down in the near term, you wouldn't want to probably go long there because it's near a top. So again, I wanted to share that with you, that's another way to use the groups tab or groups page on FinBiz. Look at the charts. We see financials. It's high, but it's not, and it's there's some resistance here, so there might be an opportunity with that resistance, and we'll talk tomorrow about how we're playing that. So this is the sector level. You can also go down to an industry level and look at the charts within a particular sector. So here's the industries, and we can see, okay, look at aerospace and defense is very high. So if there were a way to short aerospace and defense, that may be an opportunity, right? So that's why I wanted to share that with you. Is I'm looking, going through these charts, airports. Okay, is anybody at an extreme? We talked about aluminum. They ran aluminum up, but look at where it is. It's just kind of sitting in the middle. So I don't really see a strong opportunity either way in aluminum. So again, you can use these charts to try to identify sectors, industries, and we can even go one level deeper and I'm going to go into energy, since we've seen some bifurcation in energy where, okay, maybe oil's down, but they're running like solar up. So here's coal. You see how high coal is. So even though one is down, uranium's kind of in the middle. So again, you can identify within an overall industry, if there were a way to short coal, that might be an opportunity because we've seen it rotates in and out. So again, on any industry, you can select them here in this groups, you know, and see the various sub-industries. There's aluminum again, building materials, etc. So again, I wanted to share that with you. I'm going to be using this more to look for the industries and sub-industry opportunities, and then we can use our ETF spreadsheet, which we'll look at tomorrow in more detail to say, okay, if I found a chart that looked like an opportunity, like aluminum or whatever, solar, then how do I long or short that particular sector, industry, or sub-industry? I can use my ETF spreadsheet to identify ways in which to long or short that opportunity that I've identified. So I hope that helps. So if I missed your question in the chat, I can take some questions for a few minutes. I'm going to grab a drink. If I missed your question, please throw it back up in the chat. I'll try to catch it, and again, we can answer some questions for a few minutes. Um, if anyone wants to discuss another topic that I didn't already cover. Okay. Like I said, just scrolling through the chat, see if I'm missing any questions. You guys are talking about putting having different accounts in different platforms, which is great. Yeah, good. I'm glad. Tanbeer says that the sector rotation information's helping. I'm glad to hear that. Again, I'm very pleased, and also I think there's opportunities. That's what we're seeing, right? Is even in the choppy market. There's plenty of opportunities to make money trading. Is just identifying, where's the money going, where's the money going into, where's it coming out of, where's the opportunities. Plenty of opportunities to make money in any market. And that's our primary message. Um, I don't want to call anybody out specifically, but I hear a lot of people talk about this market is tough. Um, there's ways to make money in any market. So, uh, hello, Just Joe. Thank you for joining us. So, if anybody has any further questions, please throw them up. Otherwise, yeah, sorry, Just Joe. We're just wrapping up. If you have any questions right now, throw them up in the chat. I'd be happy to try to answer them. Otherwise, you can always join us in our Discord. You can find an invite in the description box below. I guess I forgot to show you that I post the economic data in a Surf the Markets channel. As it comes out in investing.com, I typically snapshot that and put it in the Surf the Markets channel in our Discord. Again, our Discord's free to join. You can find a link in the description box below. I'll try to throw it up in the banner as well. Also, thank you to Speculation, who turned me on to this tweet shift. And so now we also have a Twitter feed from MarketWatch, and that will automatically post MarketWatch articles in this Surf the Markets reports channel. So again, it's not too noisy, and I found that's very useful. So again, you can see those in the Surf the Markets reports channel. Point I was going to make, though, is if you have any further questions, you can post them. Please tag us in the Discord. We also have a Facebook group. You can hit us up on social media. And you can find links to our Discord and all of our Facebook group and all our social media accounts in the links section on our homepage, beachbumtrading.com, bum without the U. So again, any further questions you may have, please feel free to ask those, and we'll try to address them as soon as we're able. Okay, so please come back tomorrow at same time, same bat time, same bat channel. We'll talk about part 2 of our weekly trading game plan for the week of December 5th through December 9th, where we'll take all this market analysis, all of our strategies we just talked about, and we'll select our individual stocks to put on our various watch lists. For the trading week of December 5th through December 9th. Also, as just a little bit of a teaser, we have a number of questions that have been posed regarding options trading and options trading strategies, and I will address some of those questions at least and give you some references to some further information about some of our options trading strategies. So again, we'll talk about all that tomorrow. And our watch list for next week, and all the different ways we can potentially make money together. So have a great rest of your Saturday, and I hope to see you all again tomorrow. Thank you. Have a great day. Bye.